Hi everyone, welcome to today's webinar. This is part 2 of our accounts workshop. So I'm Catherine Patel, a partner with Buzzacott's charity and not-for-profit team. So in terms of today's agenda, really the main aim of today is to cover what's required for your statutory accounts preparation for the trust, but also looking at really the practical tips relating to that, an Excel workbook, and also preparation for the audit too. So I'm going to start with an overview of the key items to consider as part of the accounts preparation process. I'll then hand to Hugh, who will look at the detailed accounts workbook, and then to Catherine, who will look at some of the audit requirements. We've already circulated some useful materials prior to the webinar. We'll refer to some of those, but you don't need them open today, but they are available for you to look at afterwards. And we're also going to be circulating afterwards the slides and the recording, so you can look at this again together with those materials. So just in terms of housekeeping, you're all automatically muted and videos are off, but you can ask questions at any point during the webinar. That's via the Q&A function, just on the right hand side of your screen. It's the 2 speech bubbles with the question mark inside, and all questions will be kept private. In terms of timing today, we're probably struggling a little in terms of time for questions. We'll probably reach the hour with the webinar session. We will answer questions if we have time within the webinar, but if we don't and you have questions, please do still ask those and we'll answer them afterwards in the follow-up to the webinar. So moving on to the first section. So I'm just going to look at the statutory accounts preparation and really some of the steps that you need to take and the overall process you'll need to go through in order to pull together those year-end financial statements, the figures for the year-end financial statements. So as I mentioned, we're really covering the various elements that you'll need to consider over the coming months as you reach the year end, and then also the audit work that takes place in the autumn. So we've split this into the accounts and then the audit, but obviously there is some degree of overlap here. So as I said, I'll cover some practical tips now and then hand over to Hugh, who'll look at the Excel workbook, and Catherine for the audit side of things. So in terms of preparing the accounts, really the starting point and the process here is set out on this slide. In terms of the materials that we issued in advance of the webinar, of relevance here is the prepared by client checklist, and we've split this into the accounts deliverables and also those required for the audit and also the Academy accounts return as well. So I'm going to look predominantly at the statutory accounts side, but also just touch on the accounts return as well. So in terms of the overall process that you'll go through, really at year end and then subsequent to the year end. So I suppose starting with the obvious, but ensuring that all transactions are posted into your ledgers, into your accounting software. So the day-to-day transactions, purchase invoices, all of your income, but also plus various year-end entries. And I'll cover some of these in a little more detail, but things such as the accruals, prepayments, depreciation charges, etc. You need to ensure that your balance sheet is fully reconciled, so the bank reconciliation being one of the key aspects to that, but numerous other areas as well on the balance sheet that you really need to make sure you're happy with in terms of the cut-off at year end and the balance sheet position that's recorded. Again, I'll touch on a few of those areas shortly. The third step then, once you're happy with the trial balance that sits within your accounting ledgers in your accounting software, is really to look at how that trial balance maps into the statutory accounts. And the Excel document that Hugh will cover really looks at this. But for example, you will have numerous expenditure trial balance codes, nominal ledger codes. Where do they map to within the statutory accounts? The statutory accounts are obviously much more on a summary level than your trial balance. So which codes are you aggregating to bring together the specific disclosures within the notes to the accounts and in fact the overall core headings within your statement of financial activities and the balance sheet. There are likely also to be additional schedules that you're required to prepare for the accounts and audit. Our checklist covers many of these, but really a lot of these are to support the additional disclosures within the accounts. And again, I'll cover some of this, but as you'll be aware, the ESFA requires numerous disclosures relating to the staffing structure and employees and their remuneration for an academy trust. So we'll need some supporting information for all of those for the audit, but obviously you need to pull that together to prep the notes to the accounts. And then finally, giving consideration to the narrative statements within the accounts. This can often be completed a little bit later than the financial results, but is still absolutely critical and vital to that process and should be completed just as soon as possible in the process. So, for example, some data is required there. In the governance statement, you have the attendance at meeting statistics. So, for example, for the board, the governing body. So really making sure you're going through the process of collating that information as soon as possible. You may need others involved, particularly for some of this. So the clerk, for example, for meeting attendance. So I said I'd cover a little bit more in terms of the year-end preparation. So what are some of the year-end points that you need to consider? And many of these, or some of these, you won't necessarily be looking at in terms of your monthly management accounts and the month-end process. The first section here in terms of control accounts, you probably will be looking at each month, certainly for the majority of these. So bank reconciliations, checking your VAT position on the balance sheet is correct. So in terms of any reclaims, debtors that are due at year end, what's the position? Have you pulled that together, and does that year end balance tie in with subsequent VAT claims that are being made to HMRC? Looking at trade debtors and creditors, checking that you're happy with the balances sitting within there. Creditors, particularly in terms of the purchase ledger, does the creditors balance, trade creditors balance, tie into your purchase ledger listing at year end? Amounts due to HMRC in terms of payroll, so PAYE here, national insurance contributions. Does the year-end creditor balance tie in with your payroll records at year-end? And you may then also have other control accounts within the balance sheet, but looking at that year-end cut-off, making sure that you're happy with that position that's reported within your trial balance. And also looking at accruals and prepayments, making any adjustments within your TB, within your ledger that are necessary for additional costs that are not yet reflected within your purchase ledger, for example, or adjusting on the prepayment side for any costs that relate to a future accounting period. There are other areas within an academy trust's income and expenditure, so trip income, school funds also, so if you're raising funds, donations, other grant income, pupil premium income, where you'll need to identify specifically the income relating to those other streams, but also the expenditure related to each as well. And that's particularly important where some of these income streams are reported within different funds within your account. Some will be reported as restricted and others potentially as unrestricted. So knowing from your ledger or looking at those individual income streams to ensure that you know the related spend against these. So pupil premium being a good example of that. Have you spent your full income for pupil premium in the year? And also looking at cut-off at year end as well. So again, pupil premium being a good example. Have you reflected the full 12 months in the financial year of pupil premium income? And you may need a debtor at year end to reflect any final outstanding amounts that are due for pupil premium, or equally you may have received some in advance for certain income streams that you need to carry forward. Fixed assets, so looking at the capital side of things, and I'll come on to this in a little bit more detail, but reflecting on capital additions. So what have you purchased in terms of capital items in the year, looking at the depreciation charges on your fixed assets as well. And then also for pretty much the majority of Academy Trust accounts, you have the local government pension scheme liability that sits within the balance sheet, and that valuation that you receive from the actuaries each year, they value the liability for the trust, and that moves year on year. So various adjustments that need to be made because of the movement in the liability each year. Again, I'll come on to this in a little bit more detail shortly. And then other additional year-end information to consider. So funds, and we'll look at some of the fund detail and the requirement for disclosures on funds, and then also additional disclosures for the notes to the accounts, as I mentioned. And then potentially there are normally additional requirements within the accounts return. So for example, sometimes on the staffing side, we're waiting for the accounts return for this year, but assuming really that the majority of the content of that will be similar to prior years. So really pulling together the accounts return data as soon as possible in the process too. So really, what do we see as some of the common issues when people are putting together a set of annual statutory accounts for an academy trust? And these are the ones that crop up relatively regularly. Fixed assets being one. So during the course of the year, you may not have identified all capital expenditure. Some of that may have been posted to some of your revenue expenditure codes. So important that you identify any capital spend that's been incurred during the year, adhering to your threshold for capitalisation of assets. So for example, you may only capitalise fixed asset spend if the item is, say, over £1,000 in value, if the cost was over £1,000. So adhering to that threshold, identifying capital spend and posting it to the correct fixed asset nominal ledger codes. And also checking if you're maintaining a separate fixed asset register, which most of you will do via separate software or Excel documents, making sure that that fixed asset register reconciles and ideally agrees to that nominal ledger year-end position. So recording the asset purchases in the year, any disposals of fixed assets in the year, and ideally also the depreciation on each of those assets in the year. So really at year end, making sure that you've identified all of those capital items, because it's really important for the distinction in fund accounting for the statutory accounts at year end. So in terms of fund accounting, we'll look at the next slide in terms of the disclosures within a set of academy accounts. There is a separate recording that we've put together covering the detail of fund accounting, and that will be circulated separately after the seminar with the slides and the recording of the webinar. So I'm only going to cover some of the key points relating to this. Similarly, on pension journals, so I mentioned that pension journals often require adjustment at year end. With the documents that we circulated prior to the webinar, there is a worked example of pension journals for the local government pension scheme and the recognition of the change in the liability. Overall, that change in the liability will be recorded through the statement of financial activities, and it will record an actuarial gain or loss, but there will also be an impact on your staff costs in the majority of cases. We haven't time today to go through the detail of that, but the worked examples shows exactly how that flows through in terms of a model set of Academy Trust accounts. Sorry, I think my connection dropped for a second there. The other point just to check is opening balances. So making sure that your opening balances tie in to the previous year's final account. So for 2020 financial year, making sure that your opening balances tie in with the 2019 final financial statements. It will often throw things out of sync if you haven't done that check and they don't agree. So in terms of fund accounting, I mentioned I'd cover some of the key points relating to fund accounting. And this is the disclosure note that's included within the Coketown Academy model accounts, which is included within the accounts direction. So just some key points to note from here, just taking the columns first of all. So the income column making sure that for the restricted general funds, the restricted fixed asset fund and the unrestricted fund, that the income noted in each of these columns here in the note ties up to the totals within your statement of financial activities. And similarly for expenditure too, so that your totals here all tie in to the SOFA. The gains, losses and transfers, you will have transfers within the statement of financial activity, potentially relating to the purchase of fixed assets. I'll cover that in a second. And also, as I mentioned, on the pension reserve, the actuarial gain or loss. As you can see here, in the gains, losses and transfers column against the pension reserve, there was an actuarial loss of 319,000. So again, that should show within your statement of financial activities and tie in. So in terms of the categorization of funds, we have the restricted general funds, which is predominantly the majority of the income that the trust will receive. The general annual grant comes in here, and the pension reserve also falls within here because it's ultimately the gag monies that are paying those contributions to the local government pension scheme. So the pension reserve liability, the 1.413 million that's sitting here, will tie into the liability that agrees to the liability that sits on your balance sheet. The restricted fixed asset funds are your capital funds. So the total balance at 31st of August 2020 here is the 10,125,000. And that will be equivalent to the carrying value, the net book value of your fixed assets, plus any unspent capital funds. So this may not tie in exactly to the balance sheet and the carrying value of fixed assets, because you may have some capital monies that you've not yet spent that are being reflected within here. And then the unrestricted funds is really picking up other items. So potentially school trip income, for example, may be coming in here as income. In order that the fixed asset fund does tie in to that reconciles to your balance sheet and the fixed asset carrying value on the balance sheet, if you're spending revenue funds on fixed assets, so in this example, from the general annual grant, there's a spend of £10,000 of the general annual grant that's being spent on fixed assets, and that's reflected as a transfer out of the general annual grants pot and into the capital funds, into the restricted fixed asset funds. So any purchases of fixed assets from revenue should be treated as a transfer to move them into the capital funds. The other point just to consider is how you allocate expenditure to each of the funds. So really where you have apologies, my Wi-Fi seems to keep dropping a little. So in terms of the allocation of expenditure to funds, where you have narrow restrictions, so for example, pupil premium will have very specific restrictions on how you spend the money and potentially other grants that you're receiving. So making sure that you're allocating your costs against those pots of funding that have the narrow restrictions, then look at the money or the costs that you allocate against your general annual grant, and then really there'll be the smaller pot that really then is allocated against the unrestricted funds. The depreciation charge for the year is put through the capital funds because it relates to the sort of the notional charge, the accounting charge against your fixed assets. As I said, Hugh has put together a more detailed fund accounting module, so he's gone into a lot more detail, and we'll issue that after today. So just covering some of the financial statements disclosures, as I mentioned, lots of additional disclosures the ESFA require within the notes to the accounts, and we've listed some of these here. So making sure that you're collating that information in order to put together the statutory accounts. You may need to, again, access other information maintained by others within the trust. So related party transactions, for example, you'll be looking at potentially declarations of interest made by board members, minutes, being able to identify transactions that have taken place with trustees or related parties. In terms of the funds, you also need to give a narrative on those in the disclosures to the notes to the accounts, so making sure that they're also included and prepared. And then various other elements here, which I won't go into detail on, but really just making sure that you're aware that they're in there, they're in the prepared by client list too. And then in terms of staffing costs, I will just mention a couple of areas here. There's a lot of detail on the staffing side required in terms of disclosures. So the staff costs analysis, your payroll staff costs, any agency staff costs included in here, and also restructuring costs. So in terms of redundancy payments, being the statutory redundancy payment disclosure, and also any severance payments. So they're payments that are made to individuals on leaving the trust that are non-statutory, and they have to be disclosed individually. So making sure you have a list of all of those, the quantum of each payment individually. Staff numbers by headcount. Headcount basis is required, although you can also disclose full-time equivalents. Higher paid employees deemed to be those earning over 60,000, so disclosing the bandings, and the bandings exclude pensions and NI, but you do also disclose the total pension costs for those individuals. Aggregate remuneration for key management personnel is required. So for all of these individuals, the higher paid individuals, senior management team, worth collating all of their, basically the salaries, any benefits paid to them, pension payments relating to those individuals, and also employers' NI, and the various disclosures will include or exclude pensions as required by the accounts direction. And also a note of any employees who are also trustees and are receiving remuneration on that basis, because they are also disclosed in bandings of £5,000, together with any reimbursed expenses for trustees and any insurance that's paid to protect, indemnity insurance that's paid to protect trustees and officers. So just finally from me, in terms of the annual return, as I mentioned, not yet issued, really based on the prior year here, but really just making sure that you're collating, if you're looking at, for example, staffing cost disclosures for the statutory accounts preparation process, at the same time pulling together requirements for the accounts return process. And we've listed some of the requirements here, and they're included within the prepared by client checklist too. Obviously we'll notify our clients at the point at which that's issued and any changes are confirmed. We do think that and I know there's been discussion in the sector that the counterparty balances that have previously been included within an accounts return potentially not required this year, but again to be confirmed, and we'll confirm that to clients in due course. But really making sure that those additional requirements for the accounts return are included as part of that year-end prep process. So that's all I'm going to cover. I'll now hand over to Hugh, who will cover the Excel workbook.
Thank you, Kath. So I'm going to talk through the Excel workbook. So these are the workbooks that take the trial balance and then turn that into a set of statutory financial statements and the process for doing that. So on my next slide, just highlight the different workbooks that we've developed at Buzzacott. So we've got separate workbooks depending on whether you're a SAT with a subsidiary that needs to prepare consolidated accounts, or a MAT or MATs with subsidiaries. And we've actually got even more workbooks for specific circumstances as well. So with this session, we're going to take a look at some of these workbooks and the process for getting from a trial balance to a set of accounts. It may be that for your Academy Trust you don't use these workbooks. If that's the case, we've designed this so it's still useful just for highlighting some of the best practice things about putting together a sort of audit trail behind the numbers in the accounts. It may also be that you get assistance from Buzzacott in putting together this workbook. If that's the case, again, I think this is still designed to be a useful session for understanding how it's put together so you can better analyse and understand the decisions made in putting together the accounts workbook. So the next slide, what's actually the purpose of this workbook? Because actually for our accounts, the final accounts that we produce are in Word format, so they can incorporate the trustees report and the governance statement. So why have this this workbook as well? So the key purpose of this workbook is to have an audit trail between the trial balance and accounts, because if you just have it in Word format, there's no audit trail there for where the numbers come from, and it's not robust and easy to find your way back to the trial balance. So that's the key reason for having this workbook. The workbook that we've developed has got other benefits as well. It includes integrity checks, so that if numbers that should cross-reference don't, it will flag that up to you. It has complete disclosures, so the Academy Accounts Direction is updated each year, so this workbook takes account of the latest accounts direction, so you can get confidence on the completeness of disclosures. It's got a process for incorporating journals that are either entered through the accounts preparation process or the audit process. There's a clear trail from the trial balance through the journals and to the final accounts that are produced. And it's good for aggregation of trial balance information for MATs. It's a fairly straightforward process, but it's useful for MATs aggregation of information. So what does the workbook look like? On my next slide, we start to see this. So over the next few slides, I've got a number of screenshots of the workbook. That are just taken from Excel, so you can see what it looks like. And so what you'll see here is the first statement in the accounts, is the statement of financial activities, and it essentially just looks like the Coketown model accounts in terms of the rows and columns that we've got there. But what we obviously notice about this is that the cells are coloured. And so that analysis is key to this workbook. So going on to my next slide, I'll explain that. So there's essentially three colours throughout this workbook, and they relate to how you get the data into each of the cells within the financial statements. The green cells are user-filled cells, so this means basically you're hard typing the numbers in these cells. We've got to be careful with this, because the whole purpose of this workbook is to map information from the trial balance into the financial statements. So as a result, you would expect that there's not many green cells in the workbook. The kind of green cells that there are for things like the comparative SOFA. So what the workbook does is map the current year's trial balance to the financial statements, but last year's information is in last year's signed accounts, so we can just type that up to the workbook. We've already got the audit trail from that from last year, so there'll be green cells around that. So the workbook's designed so that those numbers that can be hard typed are, but you should be careful about hard typing other cells that aren't green, because that could cause an integrity problem with mapping through from the trial balance to the actual financial statements. The third category there, the blue cells, has got a formula in it, and either that formula is just linking to another cell, but ultimately will link back to the trial balance, and there's a standard formula which is on that page which links things to the trial balance, and that's the whole purpose of this workbook, really, that information tracks through from the trial balance. But we've also got this the middle category there, the purple cells, which have got a separate formula in them. So there are cells that's difficult to track through from the trial balance, but need to ultimately have an integrity back to the trial balance. And that is typically around fund accounting. So fund accounting is always the complicated area for Academy accounts, and that's because the fund accounting doesn't come straight from the trial balance. In a lot of cases. So if we took one example here, say donations income, so just voluntary donations that the Academy Trust might get, you may have both restricted donations and unrestricted donations. So if we took an example where you've got 10,000 of unrestricted donations and 5,000 of restricted donations, they may all be sitting in one trial balance code. So you may have just 15,000 in the TB code. So what the workbook does is, under the note to the accounts which has donations, it just picks up in the unrestricted column the donations, and it'll pick up all the 15,000. But obviously, knowing that you have some restricted and some unrestricted, you're going to have to put a formula in to move that £5,000 of restricted donation into the restricted column. It may be that the donations are all restricted, in which case you just need to move the formula onto the restricted column. But it's those kind of things where you'll see throughout the workbook there's some purple formulas to make sure that fund accounting and other things where you need to analyse information further is carried out, because we can't get the information straight from the trial balance. Throughout the workbook, the formulas that link to the trial balance, as I say, are a standard formula, and that formula is on the slide there. So it's a sum-if code, and if you're not comfortable with these, it's the same formula throughout the workbook, so you can just copy and paste it and it'll do the same thing. And all this formula is saying is just look for anything that's that's the thing within inverted commas at the end of the formula. So in this case, right at the end, you've got the NCL in inverted commas. It's just saying look for anything on the trial balance that's coded up with NCL. So if you want to use this formula, you just copy and paste it, and then you adapt it by changing the thing in inverted commas at the end of the formula. So what is that NCL? What's that all about? So that's covered on the next slide. So the basis for all of the mapping on the trial balance is the trial balance tab in the workbook, and this is just focusing on an element of that trial balance tab. So what you've got here, the green cells are actually the data from the trial balance. So this should be, I think, imported rather than typed in here from the trial balance. You've got the nominal code, the nominal name, and the balance from the trial balance. And then the key column here for mapping the trial balance is column B, the type. And what this is, the type is doing is it's identifying areas of the Coketown financial statements. So it's saying, where does this nominal code map to in the Coketown financial statement? So, for example, the notes to the accounts will include, say, debtors, and debtors will be split down between trade debtors, prepayments, etc. And so if we had a nominal code that related to prepayments, we would put pre in the type column there, and then that would get picked up in the note to the accounts, any nominal codes that related to prepayments. The types are predetermined, so there's a list of types that possible types that you can use. If you haven't used one on the list, the column A will say that it's not valid. So you've got to make sure that they're all valid types. If they're not, there'll be some trial balance codes that don't feed through to the financial statements, and therefore you won't get a balanced set of financial statements. So this coding by type is the key to the whole thing, really. Over on the next slide, just to highlight, this is the same tab in the workbook, so you can see we're starting on the left on column E, which is the closing balance, and it just moves over to the right. So you can put the journal entries here if you've got any journals to what you had in the closing trial balance, and that will come to a final amount, which will then get rounded, and it's that rounded amount in column O that actually feeds through into the workbook itself. And as I said, this workbook's good for audit trails. So you can filter by type. So if you wanted to see what that prepayments example went into prepayments, you can filter by pre and see how those nominal codes went into that. Or you can filter by sort of areas of the financial statements or notes to the accounts, and that's columns P and Q here, which I've circled. So if you wanted to see what was in debtors overall, you could just filter by debtors and see what's in there. And that's very good for cross-checking back at the end and making sure your accounts balance, which I'll come on to. So on the next slide, we look at the funds note again, as a crucial note in the accounts. Unfortunately, this workbook or any other workbook or software doesn't miraculously take your trial balance and turn it into a set of financial statements. That's not possible, and it's one of the key reasons for that is fund accounting, because within Academy trial balances and accounting software, you won't get full details of fund accounting, so it's not possible just to press a button and report on funds accurately. So that needs to be done through this workbook mechanism. And so this workbook is just set up to make certain presumptions about fund accounting. Those fund accounting presumptions in the workbook, the formulas in here, may not be correct in your circumstances. So this is an example of an area that needs to be worked through, and to get the accurate figures, you need to change what's in some of the cells. So just to take this funds note and how it works, that the balance brought forward just comes from last year's accounts, so that's a green cell that gets typed in. The income maps from the trial balance, that should work. You should have nominal codes for GAG and everything, so that should map through. It's the expenditure, as we've highlighted, where the issue is how that gets allocated. This workbook assumes that the formula in the cell for expenditure is just minus the income formula. So if you picked up 80,000 of pupil premium income from the trial balance, the expenditure will just be minus 80,000 in there. Obviously, that may not be correct. You may have had to brought forward balance and spent more than 80,000, or you may not spend the whole 80,000. So this note to the accounts needs to be adapted to get the right figures, and the formulas and information needs to be adapted. Because you are adapting it, there's then a risk that it won't flow through properly and your accounts won't balance. So you'll have to do cross checks, therefore, to make sure that the totals balance off, otherwise you'll get an imbalance in the account. So this is the main area where some of those judgments and adaptations are needed, but there are other areas around support costs, which I won't go into now, where that's needed also. So over on the next tab, we look at the funds by school. So if you're maths, you'll split down the year-end fund balances by academy, and it's just the same principle here. There's a formula in this in these cells that tries to pick up what those fund balances would be from a normal academy trial balance setup. It may not be correct, and it often isn't. So these formulas may need to be adapted to try and get the right fund balances and make sure they reconcile back to your figures in the individual schools, and they total off to what's on the balance sheet in the totals here. Over on the next slide. This is the integrity checks within the workbook. So there's a separate tab for integrity checks. It is worth going through these, so most of these shouldn't have an error. Sometimes there's ones like checking that the net book value of fixed assets equals the fixed asset fund. As we've heard, that may not be the case because you may have cash, unspent cash sitting in the fixed asset fund. So this will just pick that up, and then you can note in the justification why there is a difference, and that will be legitimate. But it is worth checking through those integrity checks. And on the next tab, really just the final points I wanted to make on this, some of the tips we've got in the common issues that we see. Just to mention on the prior year TB, so if you've done this exercise in the previous years and have done all the mapping and everything, then it may feel like work having to use a new workbook that maps the current year's accounts direction. But to make that more straightforward, you can just copy and paste the mapping from the last year's trial balance. Assuming your chart of accounts hasn't changed, that will get pulled through into the current year mapping, and then that can be your starting point for this year's accounts. You may get rounding differences in the accounts. Accounts are rounded to either pounds or thousands, and so you're likely to get rounding differences. So if your balance sheet, you go to the bottom of that and there's a rounding difference at the bottom, you'll need to eliminate that. The best way of doing that is to go to the rounded figures in the trial balance, because ultimately if you've got a rounding difference, it probably means the trial balance doesn't in a rounded basis doesn't add up to 0, and then you can just add or minus 1 from one of the largest figures and make sure that balances, and then that should make the balance sheet balance by rounding. But it may be that your balancing difference is not rounding and you've got a bigger issue that the accounts don't balance. And as we've seen with things like the funds, there's various causes of that, because other information needs to be added in that might cause an imbalance in the accounts. I think the best way to deal with that is go back to some of those filters that I looked at on the trial balance tab. Ultimately, the first thing to check is your trial balance, or the rounded trial balance that's pulling through actually balances, and assuming that balances, then you can filter by area and just make sure that all of those trial balance codes are feeding through into somewhere, and you can filter by area, debtors, creditors, fixed assets, etc., and making sure that the totals are the same as the totals on the balance sheet and statement of financial activities. Ultimately, if you've got a balanced trial balance, everything's captured, the totals will balance, and therefore there must be something on the overall balance sheet which isn't tying up with those totals. So that's probably the best way to check through in the first instance. Do make changes to this spreadsheet. It's not designed to be fixed and capture every eventuality. Your set of accounts may have additional rows in some of the notes. They may have entire notes that relate to things that aren't in the Coketown model accounts and need to be added in. So it's absolutely fine to make changes to the spreadsheet. It's just a tool to help making the accounts as easy as possible. So please do not see it as fixed. Please do make changes. If you make changes, it's best to follow the same principles of using that formula that tracks through to the trial balance. The more you start putting in sort of hard type numbers or numbers that come from elsewhere into the notes, you're then risking an imbalance in the accounts and something that doesn't trail back to the trial balance. So try and use the same principles, but do adapt the spreadsheet for your own purposes. And finally, the accounts return. There is a tab in the workbook for the accounts return. The workbook that we sent around is a draft. We're just doing the sort of road testing at the moment, so please just wait till we get the final drafts out for the recent accounts direction before you utilise it. So there is an accounts return tab in the workbook. That's not designed to generate the whole accounts return. That tab captures a lot of the information that we need in addition to what's in the financial statements for the accounts return. So hopefully if that's filled in, then we would come to doing the accounts return, we've already got a lot of the information that we need in order to produce the accounts return. So that's everything from me on the Excel workbooks.
Okay, great. Well, after hearing from Kath and Hugh on how you pull the accounts together, and particularly looking at some practical tips, what I wanted to look at now is actually the audit requirements for the year end, and hopefully some practical tips for preparing for the audit. So on my first slide, I've just set out the various audit requirements for academy trusts, and as you know, there are numerous of these. So firstly, we have the financial statements audit opinion. So really what this is doing is actually looking at whether the accounts present a true and fair view of the financial performance of the trust in the year, and then also looking at its financial position at the year end on the balance sheet. It also looks at whether the accounts have been prepared in line with UK GAAP. So this actually means the financial reporting framework, which in your case is FRS 102, the Charity SORP and the Companies Act. It also looks at whether you're complying with the ESFA accounts direction, the Coketown model accounts, and all the various disclosures that we've been talking through earlier in this session. And then it also looks at the information in the trustees report. So the audit report will be commenting on whether this information in the narrative section is consistent with the figures in the financial statements, and also with the auditor's understanding of the activities at the trust and what's taken place during the year. The next one is the limited assurance conclusion on the statement of regularity, propriety and compliance that's made by the accounting officer. And this sort of second audit conclusion is also included within the financial statements. And then the third audit requirement is the limited assurance conclusion on the AAR. So this again is an additional ESFA requirement on the AAR. So then moving on to my next slide, I look at the financial statements audit in the first instance. So really just a bit of background really to the audit. So for an auditor to be able to actually reach an opinion on the truth and fairness of the figures in the accounts, they will have to go through each of these figures in detail. And the way that we tend to do this, we document all of this information in the audit file. And as you can see, this is really just a directory for all of the sort of financial statements areas. So if we take tangible fixed assets as an example, as auditors, we would need to look at this balance in the accounts, and we'd need to understand where those numbers come from. So we'd have to agree these from the notes to the accounts through to the trial balance and the figures entered into the accounting system. But also the other underlying information, so the fixed asset register, as was being looked at in the first session of this webinar. We will then also need to do some analytical work on those significant and material balances. So we'll need to understand why there might be sort of variations from expectations. So be that from, the budget or the prior year figures. And there'll be an element of sort of detailed testing and vouching some of the balances within the fixed asset amount through to invoices or, other supporting documentation. But really throughout, as auditors, we will be actually focusing on those sort of riskier areas. So for example, again, looking at fixed assets, if you've maybe had some capital works on the roof of the school going on over the summer holidays, a key risk area that we will be looking at in this case would be cut-off. So, you know, we'd want to maybe look at invoices from contractors that had been received around the year end and also after the year end to make sure that those had been fully captured and correctly accounted for in the financial statements. And we'd go through the same process throughout the audit file for all of those key financial statements areas. So just onto the next slide, what I've done here is just set out some practical information. So this is the kind of information you would need to pull together in advance of the audit fieldwork, and having this all together in advance will help ensure that the audit progresses smoothly and that you're best placed to answer any questions that the auditors might have. As you can see from the slide, these are the kind of things you'd expect and ties in with the first parts of this webinar really. So you would expect to have sort of detailed schedules that sort of break down how the figures in your accounts tie through to your trial balance. As Kath was saying, you would expect to have year-end balance sheet reconciliations. You would have breakdowns for all of the key figures such as prepayments, accruals, all of those sort of year-end adjustments that you've posted as journals. And then you will have as well the schedules that show how the additional disclosures that don't come directly from the TB, the things we've been talking about, such as staff numbers, severance pay, higher paid employee disclosures, supporting information as to how you collated all of that data to be included in the accounts. As well as all of this information, which really supports the figures in the financial statements, auditors will also need access to other data. So things like minutes of board meetings, minutes of key committee meetings, declarations of interest from trustees and senior management, budgets, forecasts, and all of this information which supports the sort of the governance disclosures within the accounts, but also all of those additional sort of non-trial balance disclosures. So moving on to the next slide, I've just set out here a couple of extracts from the PBC list. So a PBC list really is prepared by client is what it stands for, and it's really what auditors use when they're working with clients in terms of giving you a list of things that we would need in advance of the audit process. So as has been said already, we did share as part of the webinar sort of sign up some additional resources. So there is a full version of the PBC list that you can refer to, but I wanted to just look at a couple of extracts here on the slide. And if you can see that slide, hopefully that gives you a good idea of the type of supporting information that we would be expecting to be provided as part of the audit, which really you know, in most cases is what you will be pulling together yourselves anyway as part of your year-end process. I just wanted to note here that the ESFA have now actually put together also a list of audit information, which is useful. I think, however, it's probably best that as part of your sort of year-end planning procedures, you do check with your auditors on this, as it might be that their preference will be that you continue to use the individual auditors PBC list, which is in sort of their own format. So maybe just double check on that. So then moving on to the next slide, moving away from the financial statements audit, I now wanted to just have a look at regularity. So the first slide really is just setting out some of the key definitions as a reminder. So when we talk about regularity, this actually refers to whether the funds in the Academy have been spent in line with the purposes that Parliament intended. You then have propriety, which is all about standards of conduct, behaviour, corporate governance at the Academy Trust. And then compliance actually refers to operating within the terms of your funding agreement with the ESFA, and the funding agreement is also deemed to mean the relevant Academy's financial handbook. So each year, the requirements of the new financial handbook lead to this sort of compliance aspect of the regularity audit. So on my next slide, I've included some of the sort of most common issues that arise from regularity audits across the sector. So really just to give you a bit of an idea, the kind of things that have sometimes gone wrong at Academy Trusts that have meant these have needed to be reported in the regularity conclusion. So things like regular related party transactions, not at cost. So obviously this is in contravention to the Academy's financial handbook requirements. If there have been any severance payments for which you haven't sought prior approval from the ESFA over the certain limits, again, this is a disclosable item. Having entered into finance leases, and also things like actual instances of fraud or theft at the Academy. Audit recommendations will also arise if the auditor views that your financial procedures are out of date, so they're sort of not up to date with the latest requirements of the financial handbook, or actually if as part of the testing, the financial procedures that you have in place aren't in line with what you're doing day to day. So the actual practice isn't following your own procedures and requirements. And then the final point there, whether the approval of relevant transactions isn't in line with the financial handbook. So just moving on to the next slide, for the upcoming regularity audits this autumn, it's the 2019 version of the Academy's financial handbook which is relevant. So in terms of the compliance requirement of the regularity audit, it's the financial handbook that was issued last summer, which became effective from 1st of September 2019. And as